Hey everyone, this is Darrell from the Wealthspire Investment Team. Hope everybody has had a good start to the summer. This is our July installment of our Markets in 2 Minutes series, and we wanted to take a big picture view this month since it's very typical for people to perhaps pay a little bit less attention to markets during the summer months with all that's going on. And there are some interesting dynamics taking place when you where you might draw very different conclusions about what the market's anticipating will happen over the second half of the year, depending upon whether you're looking at the equity market or the bond market. So we'll start with equities, and this table here is comparing relative performance of so-called cyclical sectors within the equity market. So think consumer stocks, tech, industrials, and other businesses that are more closely tied to the economic cycle. And then it compares them to defensive stocks like utilities and healthcare. And it's pretty clear that after the market bottomed in April, cyclicals have strongly outperformed. And what that's telling us is that the equity market is pricing in a reacceleration of economic growth, right? These are stocks that typically perform better when the economy is heating up. And that's inconsistent with what we're seeing in bond markets, where there's this sense that growth is weakening. And that's reflected in market pricing, which at this point in time is implying that the Federal Reserve is likely to implement two rate cuts before the end of the year, and then two to three more before the end of 2026. To this point, the Fed has been very patient with its willingness to cut rates, primarily because there's a lot of uncertainty as it relates to the implementation of tariffs and whether we see any inflationary pressures resurface on the back end. Because if that were to happen, the Fed would be more inclined to hike rates, right? That you see inflation rising, that's a typical way for the Fed to combat it. But clearly, the bond market is not anticipating that sort of outcome. And so it's created this interesting backdrop where the stock market appears optimistic about growth, but the bond market's more skeptical. And ultimately, this inconsistency can't hold forever. And so that's going to be something that will be important to watch over the back half of the year, is sort of that push and pull, and ultimately which market ends up being caught wrong-footed. At the end of the day, this is just another reason that diversification works so well over the long term because you have these different views expressed in different markets, but it can be a little bit tricky to interpret these things in the moment. And very much like the Fed, we're all sort of in a wait and see type of position where each new release of economic data is useful in helping us gain better clarity on where markets could move in the near term. But until then, we'll keep watching all of this as closely as we can and look to provide you more insights next month. Thanks for tuning in.